A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a dramatic turn of events, President Donald Trump has reignited tensions with Federal Reserve Chair Jerome Powell, suggesting that costly renovations at the central bank's Washington, D.C. buildings could provide grounds for Powell's dismissal. This ongoing feud has roots in Trump's dissatisfaction with Powell's refusal to lower interest rates, a move the president has long advocated for. Recent discussions within the White House indicate a potential shift in strategy, as Trump contemplates the unprecedented action of firing the Fed chair. Legal experts warn that such a move would likely lead to a contentious courtroom battle, raising questions about the independence of the Federal Reserve and its implications for the economy. Historically, U.S. presidents have respected the autonomy of the central bank, refraining from direct interference in its operations, even amidst policy disagreements. However, Trump appears unfazed by this tradition, openly discussing the possibility of firing Powell with Republican congressional members, who reportedly expressed support for the idea. This situation has escalated, with Trump publicly stating that it is highly unlikely he would take action, while simultaneously questioning whether Powell's management of the $2.5 billion expansion project could justify his dismissal. Legal analysts note that Trump's lawyers have cautioned against the difficulty of legally removing Powell, especially following the Supreme Court's ruling this year in Trump versus Wilcox, which emphasized the Fed's unique structure and the insulation of its governors from political removal. Should Trump pursue this course of action, it could lead to a protracted legal battle, with Powell potentially seeking a stay on any removal efforts, thus prolonging the uncertainty surrounding his position. The ramifications of this conflict extend beyond the personal dynamics between Trump and Powell. They pose significant risks for the financial markets and the broader economy. Experts warn that any attempt to undermine the Fed's independence could have dire consequences, recalling instances in other countries where political interference led to economic instability. Trump's continued criticism of Powell and the Federal Reserve Board has intensified, with the president recently lambasting them for their high interest rates, which he claims are stifling the housing market and harming young buyers. In his latest social media posts, Trump has labeled Powell one of his worst appointments and criticized the Fed board for failing to curb what he perceives as detrimental policies. Despite Trump's insistence on lower interest rates, many members of the Federal Open Market Committee, FOMC, have signaled a reluctance to ease monetary policy in the near future. This creates a precarious situation for Fed policymakers, as they navigate the pressures from the White House while striving to maintain their commitment to data-driven decision-making. Analysts emphasize that capitulating to political pressure could undermine the Fed's credibility and lead to adverse outcomes for inflation and economic growth. The specter of a potential dismissal looms large over Powell's tenure, as the president's threats serve as a constant reminder of the volatile relationship between the executive branch and the central bank. While the legal pathways for such an unprecedented action remain murky, the implications of this power struggle are clear. The independence of the Federal Reserve hangs in the balance, and the economic consequences of political meddling could reverberate for years to come. As the situation unfolds, all eyes will be on the White House and the Federal Reserve, watching for any signs of escalation in this high-stakes political drama. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.